etc. These are buzzwords. The relationship with our customers is very deep. We are not selling to the retail segment where we are dealing with hundreds of thousands of customers. We have relationships that run multi-year through multiple programs of vehicle models that will see technology adoption. These relationships, for each of the vehicle models, the exercise of introducing a new technology takes maybe 1 to 2 years. So it's a very deep relationship involving frequent interaction with about 100 to 200 people within each of the customer space. We don't do any buzzwords like AI and just for the heck of it. We don't have any such points.
What are the risk management practices that have been deployed? You said that there is a concentration of the clients, and how do you propose to enhance your market share going forward? Thanks.
Yeah. So market share enhancement is simply a question of competitive advantage. If you have strong competitive advantage and there are not too many other people who can offer what you can offer, market share will naturally improve. If you looked at our DR, just to give you an example, if you looked at our DRHP, in FY25, Brazil has reported that we have 30% market share in the ISG market, and in 9-month FY26 that number is 35% as reported by them. Okay, so where did that growth come from? Where did the 5% growth come in just 9 months? It came because more and more vehicles have deployed this technology on account of its competitive advantage. So that's how and it's different manufacturers as well. So risk mitigation is and thinking around that is very natural for anybody who's running a business. So whether it is customer concentration or anything else, one needs to be aware that these can hurt you if you don't continually address them. And if you have special technologies and it is widely applicable, it's only a matter of time before more customers come in and your numbers look more spread.
Hello. Yeah.
Yep.
I'm here. Myself Babita from Times Global News. How do you differentiate yourself from competitors in the mechatronic and automotive electronic segment?
Yeah. So I'll give you a little bit of an overview. See, the automotive industry has largely been a copy of the West. Okay, because automobiles were first built there. Automotive industry in India. So both from the OEM angle, okay, as well as the supplier angle, the history has been you're constantly looking at the West, what has been built there, etc. This is a company which has shown the ability to build products that simply did not exist, neither in the West nor here. Okay, so that is the differentiator in itself. It's a very, very strong differentiator that you are going against a norm. You are not saying, oh, this has been built in Germany, I will go and create a JV and bring the product here. You are saying that if you incorporate these technologies, your users, the OEM's customers, will benefit from it. This sort of a statement making is very, very rare anywhere in the world, and definitely very rare in India. That differentiates us.
What percentage of revenue currently comes from domestic versus international markets?
Roughly around 90 to 91% is domestic, and about 9% is currently international.
Thank you.
How much stake did the company give to IIT Bombay? And is IIT Bombay selling its entire stake or part stake?
So when we created this company, so all of us who created the company somehow linked to IIT Bombay. I am a professor there, and the guys who created the company along with me, they were students at that point in time. Okay, and we could not have created this company without IIT Bombay. Okay, IIT Bombay got us together. Not by design, but we came together because of IIT Bombay. And also the work done in the lab, this is very crucial. There are a long history of companies that have been built by IITians, but it is not linked to the work that they did in their labs. Some IITians got together and created some company. Here the work in the lab created the company. Okay? And therefore, it was very natural that they are also a birthing partner of this company. And right at the very beginning, they were given about 7% of holding in the company, which of course has gotten diluted once we have raised capital from outside. So at some point back in 2008 May, they held 7% of the company. Subsequently, they have sold a bit when other secondary rounds and other investors came in. But today they continue to hold a substantial chunk, and they are one of the selling shareholders, and they are selling some part of their shareholding in the IPO.
Yeah. The other question is, what are the entry barriers in your business?
The most significant entry barrier is the ability to build fresh, complex technologies. Okay, that of course is the most significant, but along with that, the standard things that is expected in the automotive business, which is quality, okay, low failure rates, good deliveries. Okay, these are standard expected, and the scale of the supply chain operations. Okay, we produce in millions. So all of these are entry barriers at different levels for different people. For people who are already supplying in millions, the real entry barrier is only around technology. For people who don't supply in the millions, the entry barriers are far more. It's not just technology, but also supply chain, quality, and delivery.
Okay. Is that also the reason why global giants have not been able to get into your business? And then there is a query that Honda has tried. What are your views?
See, global giants are constantly looking into, at least for sensorless computation, they are constantly looking at how to compete with SEDEMAC. So their efforts are ongoing. There are local companies who are also attempting to crack it, but so far, because it's been complex enough, we have been able to maintain our edge. Okay. This does not mean that nobody will ever be able to do it, but if you build complex technologies which are fresh, usually you will stand very good for a long period of time, especially if you continually improve on it. Maybe Amit, you want to add on to it?
Yeah. So the first, just to add to what Professor said, the first time we introduced the technology was in production, that is, was in 2018, and since then the technology has been on more than 10 million vehicles. It has been, there have been several field deployments across various models, etc. So of course we have built a lot on top of the technology. So that is the one thing that the technology building is not stationary. It's not that you have built something and somebody else will build it and start competing. It's a moving target. You keep building on top of what we have done and just staying ahead. Having the first mover continually. Again and again keep coming up with something fresh. That is the way you can compete in a market like this.
There's an online question again, which is about please share the details of patents that that SEDEMAC is having, if at all, and how will this help your workload.
Yeah, so we do have patents. So about patents, we approach them in a different way. Our approach is not that if we think that something is sort of patentable, immediately patent it. That's not the way we think about it. Our patenting strategy is to look at it two ways. One is you want the freedom to operate. That is, you want to put something where somebody else doesn't come to you and say that you're infringing on whatever they have built. And secondly, try to protect sort of genuine differentiators. What we try to patent are things which are like clearly different, defensible, etc. So we have patents across several geographies, including India, USA, Japan, China, many countries in Europe, etc.
Okay. I think that's about it. Of course, the last one is, will you further invest in Capex, and what are the new products in the pipeline?
New products in the pipeline, we won't be able to comment beyond the RHP. The two new markets that we mentioned, that's what we will comment. On Capex, roughly speaking, if you have taken a look at our financials a little carefully, maybe a pattern has come out, but I can spell out the pattern. For every additional dollar of growth, we roughly have, for the sort of products that we are building, we roughly have to invest $0.15 to $0.2 in the capex. Okay. So, just to give an example, if we were functioning at 100% utilization at 650 crore, and now we are functioning at 770 crore 100% utilization, the delta that you see there, 20% of that delta should have been the additional capex in this year. You understand what I'm saying? For every 100 crore growth, we need to invest 20 crore into capex. 100 crore growth per year. That's the rough number that it has worked out for us. So the way we look at capex is that we are always in a phase. So far we have been in a phase where demand has always been very good. So as and when our customers tell us that they are planning to introduce our technologies in newer models or volumes are growing, it gives us about a 6-month, 8-month lead time over which we invest into capex and put the additional machines for us to produce the new parts. That's been our mode, and roughly around 15 to 20% for every additional dollar per year of revenue that we do. So that's been our story.
Good afternoon, sir. This is Nitin Negari from MyTax. Excellent working, good growth, and your board of directors, I think your exposed to work, what we can see from the pricing seems to be the issue. If I'm not wrong, your issue is priced at 135. Now, your largest competitor, Boss, is at 6 times its turnover, and you are pricing at around 4.8 times your turnover. Your EPS, P ratio is about 60 times. Now, where is the scope for us to invest? I know merchant bankers will say it has been decided with the management and the selling investor, but where do retail investors get money from?
Did you see the history of money making in this company? I had a slide for that. So obviously nothing can be promised, and it is true that merchant bankers will say something and we'll have to listen to them. It's also true. Okay, it's not just saying something. There has been a history of, by the way, every single time an investor has come in, उसको लगता है कि अरे मेरा तो नहीं बनेगा यार. That's normal. The pricing that has been done here obviously is through consultation with investment bankers, and there is a good amount of scrutiny from potential anchor investors on whether this has been consistent with our past. Okay? Here there is a difference. We are not a first-time promoter who's coming and discovering price in the marketplace. We have a very long history of transactions, many of which have been disclosed in the RHP. There is nothing different in this transaction from the past. Okay? So, while there is no guarantee that new investors will make money, it's an equity investment, our past does say something.
Without revealing, perfect. I keep saying it, but now this is the last. This is from Deccan Chronicle, Ravilantan. Was there a situation ever that the product had to be recalled? And this happens in the automotive sector, and hence a very natural question.
Yeah, if there had been a recall situation, we are a set of scrupulous entrepreneurs, we would have definitely disclosed it in the RHP. Typically what happens is that, so there are two phases associated with quality. Whenever you are introducing a product for the first time, okay, in a fresh model, maybe with a fresh customer, the likelihood of failures is higher. Okay, so you have to be a little cautious there because there are many views there. Okay, your product may need slight changes. The customer's integration techniques may be different. Manufacturing techniques may be different. So new product introductions pose higher risks of failures, and we have had situations where new product introductions pose a little bit more risk of failure, and we have mentioned that this happens but our running failure rate is top notch, okay, on par with the best in the world, and we can say that very confidently both for our mobility business as well as for our generator.
Okay, on that note, the Q&A session comes to an end. I'll of course request Mandas to do the needful, but before that, two segments that I need to take your permission. One is, once the closing remarks are done, we will request you to go towards the vehicles. Over there, you can explain if somebody wants to have a query on how it operates, etc. And the other is that you need to pose as a program.
Absolutely. We encourage you to please come and see the vehicles. You can see the parts in the vehicles. We may be able to show its functionality as well. So please come and take a look at it and you will get a much better idea, I would say.
Yeah. I now invite Mr. Mangesh Gurli, Director, Avendus Capital Private Limited, to give the closing remarks.
Good afternoon, everyone. After a power-packed presentation like this, it's very difficult to give closing remarks, to be very honest. So I'll keep it very, very brief. I'll just go back to my first interaction with Shashi and Amit around a year back when I met them at their office. And I think one point came out very clearly from both of them is we will not do mediocre products. We will not do something which 10 other companies are already doing in the market. I think the same point they have highlighted multiple times today in the presentation and in their RHP. Very rarely we see a company homegrown in India making new novel technologies for the world. As Shashi said, normally it happens the other way around. So I think with this background and with such a laser-sharp focus from the management, I am pretty sure that this company will create long-term shareholder value as a listed asset. Thank you for all of you to joining us in this presentation. Please do have a look at the technology live, as you can see, and please join us for the lunch. Thanks a lot.